I also been following the housing market crash, like by states and local areas, and I was aware Florida was starting to go downhill hard before this, and I imagine now that the hurricanes destroyed a lot of buildings, it's going to perpetuate the housing market crash in Florida even faster now.
But again, now, like for me, I'm saying, cool. Now I can pick up some cheap property in Florida.
That's an interesting way of looking at it when
I mean,
people are fighting for their lives.
that's what investors are looking at now.
I agree, but
It's
no
brutal.
question. Yes, you're right. Yeah, and that's like
Blackstone set aside like $50 billion for this housing market crash or something like that.
Yeah, I'd heard
yeah.
about
Well,
that.
I wonder if they'll even have that money given what's going on with the margin calls.
No, they already have it ready right now.
Well, I know they set it aside, but I wonder if they really have it to spend. I mean, with what's going on, I wonder if they're willing to go ahead and do that.
They'll have to redirect the money to other areas of their failing stock business part.
Yeah.
I gotcha.
Yeah, with the market down like this, yeah.
I was just looking at the Financial Post article. This is absolutely true that Blackstone is preparing $50 billion to grab real estate. This is according to MoneyWise. This article was written August 15th. So this was,
yeah, I knew that was
some
the
time
case,
ago.
but I just think with what's going on now, cash is king, right? So you want to be really careful that you know what you do with your cash. Just a thought. I mean, that's what I would be thinking if I'm a CFO of a company. I'd be like, okay, we had plans, but this is such a fluid market of what's going on. We don't know if we're going to need that. They might spend some of it. I don't doubt it, but maybe they might reduce it.
I don't know. Part of me is hoping that they're going to get killed in the stock market crash so badly that they won't be able to use that money, like you were saying.
My
Phil.
hope. That's my hope. I'm with you.
As
That's
if we
the
need to
hope.
re-enter another feudal society. Like that's the last thing that I want to see happen. And if Blackstone gets their way, that's where we're going to be heading. Blackstone and
that's
BlackRock.
what they're
both
trying to do.
ruthless.
Yeah, I mean that's what they are doing. I mean, together they are. What percentage do they control of assets?
Oh,
like
Jesus.
30%, something like that. Would I be in the ballpark? I didn't see the stats.
Man, I don't know. Between BlackRock and Vanguard, I know that they both own the majority of all companies combined. But to be
It
honest,
just goes
I
to
don't know.
show. We have like a feudal society. I mean, we have a few big players that really control the whole show, and they forced what was it? Didn't BlackRock force the Bank of England to what was that during the week? I forgot. I read something about they threatened not to trade if something wasn't I think the Bank of England didn't go into the bond. I forgot what it was. There was something they threatened to not trade, and they could have stopped the market essentially.
Interesting. I'm looking for the article, but I'm not seeing anything.
Yeah, there's something I don't know.
Oh, yeah, you're right. This article says BlackRock threatened to halt trading at the height of the UK market tumult. Let me go and
they got their way.
yeah.
Was that whenever they were doing the switch over from the paper to the vinyl or whatever the heck it was?
The polymer notes.
Yeah.
No, I think that this is something else. BlackRock has been accused of failing to protect pension fund clients by threatening to halt trading in certain funds at the height of this week's UK bond market tumult. In a memo sent on Wednesday morning, BlackRock told clients using its liability-driven investing strategies that it would freeze, quote, funds more at risk of assets being exhausted, unquote, and move the assets to cash. One professional trustee said the actions also apply to other LDI managers, left pension schemes potentially unable to take steps to protect their members. What we've seen, which was disconcerting for trustees, is that they can't buy or sell, said David Fogarty, a professional trustee with Dalriada, a trustee firm. The restrictions affected BlackRock clients using its liability-driven investing strategies that lay at the heart of the turmoil. So liability-driven investing refers to
Leverage.
Yeah,
right?
leverage.
Borrowing,
Yeah, borrowing, leverage,
selling short,
swaps.
swaps. Yep.
BlackRock, along with its rivals, including Legal and General Investment Management, Insight Investment, and Schroders, runs a range of LDI funds for pension schemes that use derivatives to hedge against adverse movement in interest rates and inflation. So, yes, these are swaps and inflation swaps.
Swaps and shorts. Yep.
Yeah, interest and inflation swaps. The
And
sharp move is
that tells you how bad we're in deep trouble, because what they're saying is we're too leveraged to handle it.
Oh, I gotta show you something else. Flabbergangs sent me this over the weekend, and I at first I had no idea what this was. This is fucking scary. So this is credit default swaps on Credit Suisse, denominated in euros.
I saw this.
This is denominated in euros against their 5-year senior debt notes.
Yeah.
So essentially, this is a swap or an insurance policy against bonds in Credit Suisse. And in just the time since January, where we started the year at the peak of the market, this has gone parabolic. It's multiplied itself 5 times over, almost, and it's still growing.
Because it really comes down to it. The credit is insurance is not going to be there. If it's a house of cards, they're not going to be able to cover that.
No, absolutely not. I mean, this isn't Credit Suisse itself that has these swaps, right? It's going to be insurance companies that are insuring the bonds, or senior notes in this case. And this is the same situation as what occurred in the housing crash, except this case, it's senior notes that are being insured against the banks themselves, or Credit Suisse, the bank. Before, it was credit default swaps on mortgage bonds, and mortgage-backed securities and consolidated debt obligations and things like that. And when you had literally thousands of firms, well, maybe not thousands, but at least a couple hundred firms were betting on all these different mortgage-backed securities that were insured by the same party, it introduced so much counterparty risk to the market that it imploded everything. So you had AIG, which was maybe it was maybe capable of insuring $300 billion worth of bonds. It was insuring $50 billion bonds 20 times over, and they exhausted all their capital in just that one bet. And they did this hundreds of times. So they literally generated trillions of dollars worth of credit default swaps leverage out of capital that they just didn't have. There's not even enough money in the world to cover their debt. So AIG.
I think an important point with that is we need everyone to know you don't have to be participating in what's being supposedly protected, like how options were supposed to be insurance for your position, and then became their own traded almost commodity in a way, their own little Pokemon card. So are these credit default swaps and everything.
The side bet on the casino, absolutely.
Yeah, people do trade these credit default swaps in order to capture the moves. Like, they do day trade these things as well. It's kind of fascinating to see these institutions do it, because this is something that only institutions have access to. This is something that's it's so highly leveraged that it is literally closed doors to the public. You have to have an ISDA in order to play with these things, because there's so much risk.
I think it's also the money, right? It's also the volume. I mean, you got to have big dollars. You can't play this stuff like, $100 or $100,000. These things are huge to play, to get involved in. More base. You can tell me if I'm more base.
No, you're right on. I'm thinking of what we're gonna do next when Credit Suisse collapses. Because all that this is telling me is that the entire financial institutional community is basically guaranteeing Credit Suisse to fail. And this is deserved, by the way. Credit Suisse has earned this.
No, I totally agree. I tell you what we're going to do, TD. All of us in this group are going to get together and sing Kumbaya, because there's not a hell of a lot else we're going to get to do.
Yeah. Well, I mean,
if this thing really blows, I mean, if the economy really blows like we're thinking, I mean, all the safeguards in the world is not going to protect anybody at this point.
Yeah, there's really no protection for us once this thing collapses, but I'm hoping that this time some of the bad actors will actually go to prison. At the very least, the Swiss seem keen to punish bad actors in their own country at this point, because it's after what's happened with Credit Suisse and the fact that now they're failing due to adopting too many risky strategies in their investment portfolio, which is the whole reason why they're in this mess in the first place. The fact that they were criminals is secondary, actually. They simply just over-leveraged themselves with risk, and then when they started losing money hand over fist, they told all their clients, we're going to win back all your money by taking on more risk. And that's basically when that market just exploded with swaps, because they were guaranteeing that this was they either had to hit a grand slam or they were going under. But this article, which I covered in a video a long time ago, I'll see if I can link that in the video once this goes up on YouTube. But I covered this when the whistleblower leaks on Credit Suisse came out, and it proved, all these documents came out from an insider at Credit Suisse who felt morally obligated to disclose that there was money coming from all over the place. They were hiding money for human traffickers, for drug traffickers. They were hiding money on behalf of the Catholic Church, which was linked to fraudulent schemes.
Unbelievable.
There's all kinds of shit in here. There's all kinds of stuff.
Yeah.
Like you had religious organizations involved that they were protecting the money of in order to dodge taxes, in order to dodge fund transfers overseas, to fund fraudulent schemes that weren't like even tied to missions by the church. And then you had human traffickers from the Philippines and Vietnam, Cambodia, and all those areas in Southeast Asia.
Well, we have to look at what is Switzerland. You know, I mean, it's basically the ability to hide your money, right? That's what made them famous.
Well, yeah, I mean, they had this ridiculous notion that Switzerland was going to be neutral to the utmost. And they've always had this history of just utmost neutrality in all things. And they're a safe haven. Like, this is where we hold the Geneva Convention to discuss the rules of war. This is where we had meetings with the Nazi Party during World War II. What else is Switzerland famous for in their Stonewall neutrality?
You probably hit pretty well. I don't know if they're not a NATO member, right? That's another thing.
No, they don't participate in any of that, honestly.
That's another one. Yeah, I don't know if they're in the European Common Market. They're probably not in that either, my guess. I don't know for sure, but you could maybe validate that.
The one thing that I do know about Switzerland is that they have this very strict policy on that they will protect the privacy of their financial investors. And the reason why they do this is because, let's be honest, Switzerland doesn't have an economy. Like, it's mostly mountains. They have a lot of rural farmland with a couple of
chocolate.
And chocolate. Yeah, we've got chocolate.
Switzerland is definitely synonymous with secrecy. That's number one.
The problem.
Right.
But if Credit Suisse goes under, so that may change the dynamics, because there'll be a lot of pressure from the world to start reforming their banking system. I would imagine, if this happens. I could be wrong. Sorry, Scrap. Sorry.
Go ahead.
This is gonna have ripple effects in other banks as well. UBS is majorly exposed as well. UBS Bank is also headquartered in Switzerland, and they're another one of the famous ones. Credit Suisse is famously associated with a bunch of criminal activity during the 2008 financial crisis, when they were swapping out. They did the same exact thing that Goldman did, but it would seem to me that Goldman got off scot-free. They barely got covered, but Credit Suisse took a huge hit in their PR team for this. They were trading credit default swaps and mortgage-backed securities back and forth, and what they were doing was they would get their hands on all of these bad MBS, these terrible mortgage bonds, and then they would sell them to somebody, and then they would buy swaps on the bonds the same day wherever they went, because they would be able to unpack them and look at them. So they made a killing in the swaps market because they traded the bonds for a loss in order to just play hot potato for them, but then they would get credit default swaps on them. So they would get them long enough just so that they could unpack them and look at them, get the swaps, and then sell the bonds. And they didn't really suffer any for this. They paid some paid some fees, right? But they made billions off of this fucking scheme. And
did they ever scheme where they basically were able to bet against their own clients, some of their clients, on their own behalf and make money, and never had a vested interest because they passed off the bad portions that they were swapping?
Yes, that's it. That's precisely what they did, and that was part of it.
Question swapping.
That is precisely what they did.
That's what happened now with EFT. Same thing. We're going through this all over again.
Mm-hmm. And now they're trying to fumble, but they got caught in some major fraud now, and now they're under a major investigation by their own government, so they cannot do anything else except to take massive risks in the market, and it's going to kill them. It's not only going to kill them, it's going to cause waves through the financial system globally, because they're going to be desperately clawing for anything to grasp onto to stop them falling over the edge of the cliff. But they're being dragged down by an anchor around their ankles, So they're going over. They're going to pull some people down with them, though. And that's basically how I see Credit Suisse, is this giant anchor around the financial system's neck that's going over a cliff. And we'll see how many are able to escape. But Credit Suisse is definitely going to drag some down.
I think most banks already have anchors, and Credit Suisse has just got like a 20,000-pound anchor. but the other banks are already, like Bank of America, they already have anchors. They're over leveraged as it is. I think most of the major banks in the world, I would guess. You're right. They'll kick it off. In other words, because the banks interrelated, they do business with each other. So
yeah. I especially expect them to be extremely linked to UBS, which has been they've been getting punished as well. UBS has been getting really hammered in the market. But I have a video that unpacks the entire whistleblower, like this whole article that I'm scrolling through it, slow motion.
And I'll read it.
Yeah, I'll have to link that here. But this is one of the things that I expect to create some more damage in the market in the near future. If we
Here's a related question. I'm sorry.
Yeah, no, go ahead. I was going to just switch over to Credit Suisse's chart just to mention that it's not even worth taking a bet against them, because now they're so their stock is so low now. It's like, what's the point?
That's why
I throw a quick question out, and then you go back. The question I have is when do we think the first major bank is going to fall, which is related to this? I just wanted to throw the question out. We go back to discuss it. I just wanted to get that out so we could discuss that later. I'm curious what everybody thinks.
I posted an article from MarketWatch that says that right now are times like accidents like Enron have happened during times when the cycle is slowing and the Fed is raising rates. That's when Enron happened, Bear Stearns, WorldCom, Lehman's. So that's another thing to factor in too. I'm assuming because they're struggling for liquidity, and if they're built on houses of cards or doing something they shouldn't be.
That's exactly it. That's the driver. That's exactly it. You hit the driver on the head. That's why I was asking, because I think we're getting close to that point. So I was curious what everybody thought. But sorry, Kitty, I didn't mean to interrupt. I just want to throw that out there for discussion afterwards before I forgot about it.
Accidents like Enron. That's funny. All right.
Yeah, quotes, you gotta love it.
Yeah, I was just going to take a look at Credit Suisse's stock, which this I don't know if it's even worth taking the bet on this anymore, but who knows? They just had a big plunge that started as of like mid-September, so they could be on their way down. But volume is starting to drop now, and they've created a fish hook pattern. So I'll keep an eye on this one. But you know, shorts on this are probably going to be pretty expensive. There's going to be a lot of people shorting this, so I wanted to get ahead of that before anybody really got any ideas that this is probably out of reach for retail. If you wanted to be a part in the fall of a major bank, it sounds great. I would love to be a participant in this, but I don't think that I have the money to make it worth my while. I'll just let it happen.
The idea of it like rooting for a bank
It
to
would
fail
be
is
a
so-
nice sense of self-vindication on a very small level, wouldn't it?
It would.
Yeah,
These sons of
would
bitches are
be.
partially responsible for the 2008 Great Financial Crisis. I want to see
But
all of
let's-
these guys burn in hell.
let's say who
I'm
else
with
is.
you on
The
that.
regulators, and like our governments.
And you know,
they're
one
the
of the
ones
big,
that allow this junk to go on. This could have
and the
easily been
Federal
curbed.
Reserve could have done things on its own as an independent body, and it did nothing, and that really pisses me off. Sorry, I didn't mean to cuss. Sorry.
That's okay. It's fine. I'll try to clean up the language after the fact. I've learned how to out my own cuss words now that I've got some new video editing software.
We need a good rant from you, PD. I haven't had one.
I would like to do another rant video. I had a good one in the voice chat yesterday, and it wasn't recording. It would have been great.
December $4 puts on Credit Suisse are only 50 cents.
December $4 puts?
Yeah.
Really?
Probably not a bad price because it probably will go down between now and
That's
through
actually
the end of
not a bad
December, right?
price. Bank of America started dropping fast. I'm expecting them to find a little bit of support here. One of the things that I like to track as a comparable to these financial institutions is their behavior, their stock's behavior during the 2008 crash. So I'm actually going to go and grab that and put that on the chart really quickly, because I want to take a look at their fall from grace. Bank of America's was absolutely spectacular. Somebody pointed this awesome feature out to me in the trading floor. I didn't even know that this existed, but you can take chunks of the chart and you can copy and paste it to other parts of the chart. You can compare them side by side. It's so cool.
It'd be good if TradingView had like a cheat sheet that you didn't have to go into everything to figure out what it was. That you actually had like a sheet that says, okay, this is what this. If you click on this, this is all the things you could do with it.
That would be nice. That would be.
I don't know why they
nice.
didn't think to do that. I thought to ask them, and I probably will.
Look at how well this chart correlates. My God. This is like a map of the next crash.
Yeah.
This correlates so well. There's even the same double top right here. Man, that's nuts. This is why I love doing this stuff. You see some really interesting patterns in here. Bank of America had its jolt back up to the upside, and it found a ceiling right around its 125-day moving average. Now it's getting pulled down. Yeah, I'll be honest with you, Bank of America looks like a straight-up show. I would expect their earnings to be extremely poor. If we did end up seeing another free fall in Bank of America similar to this, I think that we would see them back down below $15 at this rate.
$25 puts for January are 90 cents.
$25 puts for January are 90 cents. Gotta enter that one in my trading journal.
I just ran Scourge for Bank of America. Look at all the open interest on the puts for January for Bank of America.
Oh boy. Oh wow. Oh, that's crazy. These are all January puts. Some of these are so far in the money.
There's 100,000 contracts at $30 strike.
I see it. Wow. Oh boy.
Gravy train, jump on.
I'm sure that it'll make money, but what terrifies me is that we're literally betting on the collapse of one of the largest banks in the United States. If we actually succeed in this bet, it means terrible things for the entire global economy, not just America.
I think they
That's
make.
why, see, when you said you're hoping Fed is Swiss, I was laughing. I know why, but like the same thing. It's like the ramifications are awful. It's a vindication to get against those who deserve the individuals, but it's going to kill everybody.
That's the sad part of the system, is that you get all of the losses and pain sloughed off on everybody, but all of the benefits and gains seem to go to a few, with just other trickles of it coming down to the masses.
Yeah, TLDR, if we're right, this won't be fun, and it'll be worse than 2008.
Yeah.
That makes it so much scarier.
This is like a hostage situation, Bank of America, all the major banks in the United States, they're holding on to the American economy in a chokehold and on the edge of a cliff. And, everybody else that sees that Bank of America is backed against the corner, there's no way out. And it doesn't have to be Bank of America. I'm just picking on them because I hate them. But, they're holding our futures hostage at the edge of the cliff, and your choice is, do you take them out and at the risk of sending both over the cliff? What do you do?
I'm pretty sure there was a movie that was made, and Brad Pitt was saying, "Quit celebrating because you just bet against the American economy, the American people."
That's right. Yeah, that was from The Big Short.
Yes, sir.
Yeah. Just don't f***ing dance.
Yes.
I love that scene, by the way. It's a good scene.
But that's what we're talking about here. That's what we're looking at. We're looking at straight in the eye.
Yeah, we are. What concerns me more than anything is that we're so close to it. This is happening so quickly, way faster than way faster than I thought it was going to go, way faster than the banks thought it was going to go, way faster than the government. Like the government's blind. They didn't even see this coming. They just eat whatever the investment firms put in front of them. They'll take whatever they're given. They don't care. Their pockets are filled. They think that they're insulated from this shit. Between Bank of America and Wells Fargo,
They think they're insulated, but they're not, and that is the biggest. That will be the biggest impact.
Wells Fargo is yet another one that I think that we're going to see go through some major changes as well. Wells Fargo, and it's not as though I think that they're a bad bank, but I think that they made a huge mistake. They were the ones that took on the responsibility of providing all of the there was forbearances that were on all of the mortgages in the United States. They provided that capital to do it. Wells Fargo took on a lot of risk on behalf of investors in order to make that happen, and it panned out for them in the short term. Like, you could see that throughout 2020, everybody saw them doing this and was like, no, that seems like a bad idea. And then they got huge checks from the government in order to keep running. But that gravy chain's about to run out. Now, let's see, from peak to trough, they were trading down almost 40%. They're at about 33% right now. They've got a lot more room to fall. They never recovered in the same way that the other banks did. Oh, that article. Thanks for reminding me of this, Persephone. So the article that Persephone just posted, which infuriated the absolute hell out of me, is that the central banks are all pushing the same narrative, which once again is basically hoping for a pipe dream, that all of the central banks globally are going to pivot at the same time, guaranteeing a descent into inflation, which will crush the lower everyone below the 80th percentile income level in America and many other countries elsewhere that are also suffering from inflation. And this is what all of the banks are calling for. They want the central banks, like the Fed and the Bank of England, to all pivot at the same time and just start quantitative easing all over again. Start printing money. Turn the printers back on. So they are right.
That's going to happen.
They are right that the markets will not stop panicking until they pivot, but they can't pivot. They don't have a choice. They have run out of options. There's no other alternative. And the fact that BlackRock threw a hissy fit and told the Bank of England that they were going to halt all trading and put the Forex markets to a grinding halt if they didn't turn the printers back on is literally like putting a gun to their heads.
Yep. The U.S. is going to have the same thing.
At this point, the message will be very clear that the banks have gone too far. What they have done is essentially they have decided that it is better to stand up against the government, who is trying to keep the entire system intact globally, not just in America, but the global government community are being held hostage because the central banks want to keep their money flowing. And it physically can't be done. The money has only accumulated to the top 1%, and there is nothing left to take. And the system will cease to function. This is late-stage capitalism.
You've witnessed the death of the credibility of the Bank of England. They will not be the same. The credibility, no one's going to believe them anymore.
No,
just simply because they can be manipulated by powerful corporate, the banks. People are never going to believe that they have the nation, the public's interest at heart anymore. This is really damaging. Seriously damaging what happened. And it's going to happen here too, because our pension funds are teetering.
And this is going to leave everybody to believe that our Fed will pivot. I hope they don't.
They are going to pivot. There's no question. It's just a matter of time, unfortunately. That's my prediction. I could be wrong, but I don't. We have more pension funds and more issues than England does with our pension funds. I'm sure of it.
But it's bullshit, though, because it's going to it's literally going to crash everybody else's value except for the banks. This is the final stage of capitalism where we figure out whether it works out for the 1%.
It's very dangerous. It's very dangerous. This is, like I said, more dangerous than anything we've seen.
Yeah.
Because this really will damage the credibility going forward, period. And it's like the emperor has no clothes, right? The public is realizing where the power really lies, right down to the average, person who hardly pays attention will probably hear something, or, and come to realize that. I could be wrong, but if I were going to bet, I would bet that that's going to be the same. I mean, our situation has to be similar, if not worse.
I think you're right.
I tend to agree. The actions of the government prove that there's no integrity there. They already denied the bill that there would be restrictions on trading for the Senate and Congress.
Yeah.
So that already got thrown out. So we know that they have no integrity whatsoever. They're like, no, that's how I make my wealth. If you're telling me I can't do that, well, I'm not going to be a politician anymore. And all of us are screaming in unison, great, go, get the hell out.
Right? The problem is, so let's throw them out, but who do we want in? We don't trust anybody coming in anymore. So where are we?
Anybody who wants to actually change things, like all the young politicians. All the young politicians who are in their 30s and early 40s that want to change the world, who have been fighting in their local communities to bring funding to schools, to healthcare, to the people who need it. Let's bring them up.
More progressive on the Democratic side. I don't know where the Republican youth stands, but yes, you're right about that. But I still think that when people get in, they get corrupted. That's just my feeling. I mean, these people were all at one point ideal. Pelosi one time was an idealist. She probably really was. Look at her now. She's up to her eyeballs in corruption, right? I mean, she's worth hundreds of millions of dollars. How is that possible, on her salary? I guess her husband is a trader, but who can make hundreds of millions of dollars typically? I don't care how good of a trader you are. That is really a tall order to do in a lifetime if you don't start out with like a vast sum.
I was just thinking of the article that Scrap Queen had brought up a little while ago about the time when accidents like Enron have happened, and I forgot to go back to it because it was actually a worthy piece, I feel. So this was I had also read this article earlier. This was written by Steve Goldstein from Market Watch. The old expression is when the tide goes out, you get to see who's swimming naked. In financial markets, the tide is going out when central banks are raising
That was
interest
Warren
rates.
Buffett's quote, by the way.
Oh,
Warren
really?
Buffett made that quote, yeah.
Did he really? That's funny.
Yeah.
Still staying on topic with Warren Buffett.
Yeah.
So in financial markets, the tide is going out when central banks are raising rates and growth is slowing. That is to say right now. So, quote, WorldCom, Enron, Bear Stearns, Lehman's, accounting irregularities, etc., have all occurred when the cycle is slowing and the Fed is raising rates, says Khurram Chaudhry, a European equity quantitative strategist at JP Morgan in London. Quote, the probability of an accident is very high right now than in any other time over the recent past. Chaudhry says that JP Morgan's own quant macro index suggests that bond returns are likely to get a bid very soon, as it's edging further into contraction territory. Inflation expectations are high, but inflation has peaked, he says. If history is a guide to where we are today, then bond yields should soon peak and start to move significantly lower. The Fed's target rate will peak sooner than the market is currently forecasting, and equities will remain volatile even through the first part of the next interest rate easing cycle. So this narrative, I want to unpack this a little bit, is that they're really trying to push an argument that inflation has peaked, and there's evidence to the contrary because producer costs are still rising. They haven't adjusted prices yet, but retailers are still trying to hold things at prices. Like I just went to the grocery store, and this is a single story in the grand macro scale, okay? But when I went to the grocery store a few months ago, I saw that absolutely everything was on sale, and they were trying to liquidate inventory because food was going bad on the shelves and that they couldn't get rid of fast enough. Now I'm seeing that everything is on, quote, sale, but the prices have gone up because I've been paying attention. And I'm seeing that everything has gotten way more expensive, but it's still on sale, and everything's at locked-in low prices and bullshit like that. And those... This is starting to settle in the mindset of everybody else who is shopping regularly, that this is just the way things are now. So now inflation has stuck. It's here now. I don't think it's going down anymore. So the prices are now locking into their current position, and it's because the Fed hasn't been aggressive enough and they didn't respond quickly enough. It's too late. We knew this. We knew that they were too late. So even if inflation has, quote, peaked, we're stuck here now. I would say that inflation has leveled, and it's going to level for a while. We're going to sit in a plateau of heightened inflation well above the 2% target that's going to leave us hovering at 8% for the foreseeable future until some companies start to go bankrupt, and it's going to require people getting hurt before we start to see prices coming down. The only problem is that the pain can't happen on the lower income level, which is where it's always happening. It has to happen at the top level, because the rich and wealthy who don't feel inflation right now, they're the reason that inflation is driving, because they're still pouring money into the equities markets. They're still pushing prices and increasing the cost burden on the middle and lower income brackets. And taxes are just getting more tax relief on the upper echelon, and this is just going to keep continuing.
Kill the goose. The rich killed the golden goose. That's what they did. There was I don't know if you heard of AMC Bigham.
Yeah, I read him.
He had a really good. I watched it. He had some guy named Peter Hahn on, who's I guess a labor economist. It was for an hour and a half. They had a really good discussion about what's going on. It made a lot of sense to me. I could post a link, I guess. That one may be really honestly worthwhile. I'm sorry.
I was going to say, to add on to your point, that's why the Bank of England had to pivot, is because the government gave a bunch of tax cuts to the wealthy.
Yeah, that was hard. No, that trust.
Well,
Unbelievable.
Yeah, already
How tone deaf can you be?
we'll
There was a
unpack
survey
that.
last week. Over 50% of the people already want her out of office, and she hasn't even been in office, 3 weeks?
Yeah. We're gonna unpack that soon. Let's keep going on this article and finish this one up. If you happen to have that article, Scrap Queen, I'd love to dive into that next, because the reasons why the Bank of England pivoted are important for us to take note of, because it's going to get rough quick. Things might be easy for the markets in the short term as a result of this quote pivot, but it's going to end up in a lot more pain later on once they run out of options. So inflation expectations are high, but inflation is peaked, which like I said, it's, if anything, it's plateaued at best. More than that, bond yields peak when the yield curve inverts. During June-July, bond yields fell 100 basis points from 3.5 to 2.5, and a rotation towards bond proxies with inequities followed the quality and selected growth stocks outpacing value and high risk. We believe, if we are right, that an inverted yield curve soon leads to a peak in bond yields, where the trailer we saw over the summer is very likely to support bond prices, quality stocks, and more defensive sector positioning. I'll try to simplify this a little bit. What he's trying to say is that because the yield curve is nearing like its trough, that is to say that it's almost done reaching the bottom of its inversion, that they're likely to see bond prices find support, and this is going to cause a big buying swath in the bond sector. And what I think they're expecting this to translate to is that short-term bonds, as in the T-bills, will start to decline in their value again. And this will cause the yield curve to uninvert. So the 1, the 2, and the 3 month will quickly decline in their yields, and we'll start to see the 2 years slow down as well. So this is what uninversion looks like, is when you see the 10, the 20, and the 30 start to go up in their yields, while the 5, 2, and 1 start to slow their growth, and the 6, 3, and 1 month all start to decline in yields quickly. And this is the volatility of the bond market that signals a crash. This has happened historically in 2008. It happened a little bit in 2018, but we didn't quite hit inversion until 2019. And it also happened ahead of the dot-com bust. To be honest with you, it happened in one way or another in basically every crash where the yield curve had inverted. The violent moves in the T-bills, that's the short term, the ones less than a year of maturity, started to get really volatile and then took a nosedive in their yields took a nosedive as banks were quickly buying them up and scooping them up to act as collateral for assets. Meanwhile, the long-term bonds rose as a result of the interest rates increasing, so banks were able to purchase these as a safe haven asset to protect against the rising interest rates and get their clients a fixed rate of return. So let's see. Yeah, here is this whole thing is the yield curve that's in front of us. So you can see the inversion happening in late 2000 and then rapidly uninverting. And you can tell that the worst of the crash happened in 2001, early 2001 throughout the rest of the year, especially after 9/11. When the towers fell, that caused a massive crash as well. I'm sure the yield curve couldn't have predicted something like that, but that was one instance where the market just completely cratered. What is interesting now is that the Fed rates are starting to lose their height, and as they are, the yield curve is skyrocketing more, and each of these crashes have slowly gotten worse. The 2000 dot-com crash was pretty catastrophic. But the 2008 crash actually surpassed the bottom of the 2000 dot-com bubble. And we never recovered from that one. And then quantitative easing propped up the market, and now the federal funds the federal funds rate that they were trying to raise a little bit going into 2019 caused the market to throw an absolute fit, and we saw a massive crash where we had very briefly inverted on the yield curve, just a teeny tiny bit as a result of the COVID. Well, actually, no, we had inverted before the COVID crash, but then they pivoted immediately and we uninverted, and like everything was fine. But this is the significance of this signal cannot be denied. So another historical fact is that when the yield curve inverts, the Fed rate hiking cycle very soon comes to an end. It's for this reason we believe that any potential change in Fed policy going forward is unlikely to be a pivot, but simply the end of the rate hike cycle. The Fed's job is done, and they have more than likely over-tightened, he says. I think that this is inaccurate. I think that the Fed is probably going to have to tighten even further.
Agreed.
And we're going to have to be in a sustained tightening cycle. We're going to have to be in a sustained restrictive
We're in a unique
policy.
circumstance. This is completely different. We're not in a traditional cycle. We have an extreme supply shortage.
Right.
So we have to keep going. Yep. You're absolutely right.
Historically, interest rates start to rise before equities peak. The market will then continue to fall during a period of rate cuts. We will then bottom when macro and profit data start to respond to the additional liquidity and monetary stimulus. With so much uncertainty surrounded the direction of further rate hikes and where the bottom is in macro data, we prefer to overweight quality rather than value stocks. This leads him to continue to favor bonds over equities, and within equities prefer quality over value. JP Morgan colleague Marco Kolanovic, it should be said, has been a steadfast bull on stocks this year. So essentially all confidence in equities markets is going to remain at an all-time low until a Fed pivot, and this goes along with the narrative for quote accidents, but like these aren't accidents. This is just companies scrambling to maintain their shareholders and keep things running, keep things functional. But when they start doing it with fraud, inevitably they get caught out, and that leads to massive collapse. So the question is who's it going to be this time? There's a few companies that I could try to look to, but without hard evidence would just be speculation. So I won't comment on exactly which ones I think are going to get caught in fraud. But considering that Lehman and Bear Stearns both were really screwing up their books in order to prop up their investor confidence, I think we're probably going to see that again, because the confidence in all of the major U.S. banks is now starting to wane pretty severely. Let's go dig into this article. So British voters move left on the economy as Liz Truss drags it to the right. Enthusiasm is growing in Britain for higher taxes and spending on public services and redistribution of wealth. Something that obviously the supreme wealthy don't want to even hear about, and so they forced a tax break. But let's dig into this. So Liz Truss says that she's prepared to be unpopular. She'd better be. The British public is moving further to the left on how the economy should be run, just as the Prime Minister is trying to drag it rightward. Appetite for government intervention in the economy is rising, as is concern about inequality and enthusiasm for redistribution of income from the better off to the poorer, according to the latest British Social Attitudes Survey by the National Centre for Social Research, NatCen. A majority of the British public, over 52%, polled in autumn 2021, said the government should increase taxes and spend more on health, education, and social benefits. The publication of the survey comes just as Truss and her government are announcing a plan to cut taxes, including reversing the national insurance rise most benefiting higher earners, and reduce benefits punishing part-time workers on low incomes. So this is literally doing the opposite of what people are asking for, creating social stimulus in order to benefit education, social welfare.
Sound familiar?
Yeah, it sure does. And instead, they're going to cut taxes for higher income, higher wages, so that benefits only the wealthy. The thing is that the wealthy are, quote, not worried about inflation. So this doesn't affect the people that it needs to. This is going to hurt everybody else who is literally propping up the production and the economy of their entire nation as well. And this is what governments are doing everywhere that have any kind of a conservative Republican attitude about keeping capitalism status quo the same. They are refusing to place any tax burden on the wealthy because essentially they have a gun to their head.
Yep.
The shift is The shift is a recent one. The proportion of Brits who want the government to increase taxes and spend more has been overtaking those who want it to keep taxes and spending at the same level as now since 2016. A majority of Brits have chosen the former since 2017. Here's a quick line graph poll on the differences or the changes, and you can see overwhelmingly that people are rapidly shifting to the idea of increasing taxes, especially on the wealthy, which needs to happen. It does need to happen. If I was in there, I would be fine with it. I would be fine with increasing taxes. Knowing where I sit now economically in the food chain, economically speaking, I am fine and accepting of the idea of higher taxes on my tax bracket and above, so that everybody else is able to live a comfortable life. That is how our society is supposed to work. It should be perfectly fine for me to accept a higher tax burden and cost to myself so that the cost of living decreases everywhere. It will be beneficial for everyone. That way, people don't have to struggle with 3 jobs just to maintain even a modest living.
Yeah.
It benefits everybody. Absolutely everybody. When one job is able to get you a mortgage, a vacation, and fund your kids' schooling.
Yep.
The
They
proportion
should be able to measure. Go ahead, GD, sir.
It's all good. The proportion who want to reduce taxes and decrease public spending has remained stubbornly low since records began, while the other two stances tend to swing in relation to the government of the day. While the conservative government in the 90s worked to curb spending, the public wanted to increase it. During Labor's time in power in the 2000s, the public swung the other way. The public majority in the latest survey for raising taxation and spending, despite the huge amount of government expenditure during the pandemic, may well show a significant shift in priorities in the face of the cost of living crisis. Even 46% of conservative supporters said the government should increase taxes and spending, as did 61% of Labor supporters. Even among Tory supporters, almost half think the government should increase tax and spend. So this is an overwhelming majority of people saying that they need to raise taxes, probably on the wealthy, which I agree with, in order to reduce the cost of living everywhere else and increase quality of life for the majority. And I'm sure that there are even some 1%ers in this camp that are like, things have gotten too ridiculous, and they can see the writing on the wall that the quality of life everywhere is so low.
Revolution.
That revolution is just around the corner if they don't change things. Absolutely.
Well, the best way to do it is keep a statistical percentage on how much wealth the wealthy have. Right, that's a good barometer. When it starts to, they should have like a certain percentage range to be acceptable for them. I know that sounds funny, but when it gets too high, then you need to start doing something to redistribute. It's the only way society will work effectively, and that's a good way of doing it. But I don't know if they'll ever do that.
I don't know.
The problem is that they will not rewrite the tax code, and the loopholes will remain.
Yeah.
They refuse to do the work that's necessary to make it happen.
It's almost like a denial in the sense of reality.
It really is.
I don't know why they keep thinking that something's not going to happen ultimately. I mean, they've seen there's all sorts of. You have the Bastille, right? I mean, you've got French, you've got the American Revolution, you've got what happened in Germany. I mean, you could just look over and over again that when economics get really bad for the poor, something radical is going to happen.
I'm going to try to burn through this article really quickly because I've only got about 35 minutes left, and there's a lot of this left. So the proportion of Brits who said the government should redistribute income for the better off to those who are less well off was highest level since 1994 at almost half, 49%. The sentiment has risen fast, up 10 percentage points since pre-pandemic 2019. Only around a quarter of those surveyed, 27%, disagreed. The Prime Minister, however, is explicitly turning away from the redistribution of wealth. In an interview with the BBC's Laura Kuenssberg on the 4th of September, she said that she believed it was wrong to, quote, look at everything through the lens of redistribution. General recognition of inequality is also rising. More than two-thirds of British public agreed that ordinary working people did not get their fair share of the nation's wealth, also up 10 percentage points since 2019. The last time this sentiment reached this high level was in 1991. 66% of respondents also agreed that there was, quote, one law for the rich and one for the poor, unquote, a sentiment that spiked during the pandemic. In particular, the number of Brits who strongly agreed that the statement rose by 10 percentage points between autumn 2019 and autumn 2020. There were reports at the time of cronyism in the awarding of government COVID-19 contracts, and it was a few months after Dominic Cummings' lockdown trip to Barnard Castle. Those saying they strongly agreed jumped a further 4 percentage points in the year to autumn 2021, a few weeks before the first reports of the Partygate scandal in which Boris Johnson and other Downing Street members were revealed to have broken lockdown rules had emerged. The pandemic has seen a spike in people thinking that there is one law for the rich. Overwhelming agreement. Easily 2/3 majority of people are feeling jaded. And this is a scary sentiment because this is the kind of anger that once boils over leads to violent reactions. Yep. Among some politicians, there's a theory that large-scale government intervention and spending during the pandemic has heightened the taste for it among the general public. Its impact and the cost of living crisis that followed is also exposing the inequality in British society. Truss and her Chancellor, Kwasi Kwarteng, are attempting to signal a move in the opposite direction through their enormous energy bill bailout is, in reality, a continuation of the interventionist pandemic era. Their signals, such as lifting the cap on bankers' bonuses and rescuing rich companies from planned tax rises, however, could turn off a public less and less inclined to accept trickle-down economics. I really do think that this article hits it on the head. This doesn't even just apply to Britain, although it's certainly most applicable there right now. The way that they reacted to BlackRock and the other wealthy elite investment firms suddenly just saying like, we're going to stop trading if you try to raise taxes on us, and they're like, okay, we're going to give you a tax break instead. And like this is going to spill over. And honestly, if people don't, we need to make sure that we're doing the work to point people at who is actually responsible for this. Firms like BlackRock, Blackstone, Vanguard, all of these major investment banks that are just hoarding all of this cash for the supreme wealthy are the ones who are responsible for doing this. And they are holding everybody under their boot at the cost of themselves.